exchange rate and answer some of the biggest questions on your minds, like why is the value what it is today? Why is it always changing? Why is it high? What exactly is going on in that sector? Well, not to worry. All of those questions, we'll try to provide answers to them absolutely on the show. By the way, you can be a part of the show just in case you have questions. The numbers to either call or send messages to is 0916-257-1214. We're big on feedback. We want to hear from you. So wherever you are right now, you can join us with this number 0916-257-1214 or 0700 7977. That's 0700 7977, but there's one more. 0901 133 9791. I'll take it one more time. 0901 133 9791. With those numbers, you can actually be a part of the show wherever you are, whether in the hinterlands, the urban, or rural areas. You can be a part of this show brought to you by the Bankers Committee. As I said earlier on, we're talking about the almighty exchange rate, right? So fasten your seatbelts. If you're driving, make sure you pay attention to the road, but keep your ears locked on this dial. If you're at home, relax and let's talk about the exchange rate. I'm excited to tell you that I have four experts, decades of experience in the financial services sector on the show this morning, or this evening, as the case may be. Just because you join us outside the country, the morning is for you. But if you're joining us in Nigeria, it's evening, certainly. And these men will be helping us understand how the foreign exchange market really works. So if you're ready, I am ready. But just before that, if there's someone that you want to join this show right now, reach out to them right away because this train is about to leave the station. So tell them, tune in right now to Radio Nigeria, wherever you are. It's the largest radio network in the country. So tune in and be part of the show. But just in case they're not in Nigeria, they can also be a part of the show virtually. That's right. We made sure to provide all of the different channels with which people can be a part of the show. So it's bit.ly/SME radio show. So BIT, just head over to your WhatsApp, sorry, to your browser rather, and type bit.ly/SME radio show. And without taking too much of your time, let's dive in and introduce our guests on the show this evening. First off, we have a dealer financial market at the Central Bank of Nigeria, Sadiq Ahmed, joining us on the show this evening. We also have Akintoye Babalola, Treasurer, Fidelity Bank. Also on the show this evening is Olayemi Agri Davis, who's a Treasurer, Oris Bank, and Abayomi Akiemi, so Treasurer at Keystone Bank. Gentlemen, I was going to say men in black, bankers, we had lovely students. Gentlemen, good evening, welcome to the Financial Literacy Radio Show.
Thank you.
All right, so let's get right into it. And I think it's fair to start with Sadiq, giving us the view of the Central Bank of Nigeria. By the way, Sadiq, it's good to have you on the show as well. But I don't want to assume that everyone understands what the FX or the foreign exchange market means. So I think we should start with that foundation. When we say foreign exchange market, or say FX or Forex, as the case may be, what exactly are we talking about? And I'll begin with you, Sadiq, naturally, because the central bank leads when it comes to conversations around Nigeria's currency and the foreign exchange market. So, Sadiq, in the simplest of terms, what is the foreign exchange market really about?
Okay, thank you for having me, Kaede. Thank you, all the panelists. Like you mentioned, the top of the day, top of discussion, exchange rate. So exchange rate has been everybody's business, and truly is everybody's business because of how it affects each and every one of us in all our facets of life. Simply put, what are we talking about? Exchange rate on its own is a price, a currency, a unit of currency exchange for another currency. In our own case, we reference the dollar, so the exchange rate of the naira against the dollar. We look at what are those factors that are determining where this price is going to be. So if you look at it, Kayode, there are several factors that are contributing to what the price of the currency would be. But it's very important to also understand that there is a regime policy depending on what a country is pursuing. So a country can pursue a fixed exchange rate regime or a flexible exchange regime, which is also known as the floating exchange rate regime. Nigeria operates a floating exchange rate regime. So I would like to say, provide a background just to clear the road, that principally what flexibility is talking about in the exchange rate determination here is actually forces of demand and supply. So just like any other commodity, the dollar is a commodity to Nigerians or foreign investors who would want to buy. So there's a price they're willing to buy that dollar, and a foreign investor, there's a price he's willing to buy the naira. So in simple terms, that's what we're talking about. But aside, okay, so this price, this exchange rate is an interplay of demand and supply. So the supply or that
I think I will come back to you in a moment. Looks like we lost audio, but not to worry. I think you set the foundation quite well, and I'd like to bring it into the studio. Just explainers. Imagine it's foreign exchange 101 out of the banks, and I'll begin with Akintoye. I'll go to Olaimi and then come to Abaimi. Just a quick explainer. What is Forex about, the foreign exchange market, in the simplest of terms?
Okay, thank you, Kayode, and good evening to all our listeners. So let me first say, yes, Sadiq has made the simple introduction, but just to add to that, it's just a market for buying and selling quantities of one currency in exchange for another. And these rates are continually changing, just according to the strength of supply and demand for the currency. Right. So this demand and supply are created by factors like trade flows, really long-term capital flows that we call, that's the one we call foreign direct investment, and of course the short-term speculative flows too, which is the FPI. And of course the side of what you also have there, which is the supply side. If you have it that much, it tends to also help you to have the correct size or the correct situation that you have on the exchange rate there. So in simple terms, it is just the market for buying and selling the quantities of one currency in exchange for another.
There you go. So the same way we have tomatoes selling in the market, it's the same way we have the naira in that sense selling in the market, and that's what the foreign exchange market is in the simplest of terms. Am I correct, gentlemen?
Very correct.
I passed my first exam on the show this morning. So you get the sense of what the foreign exchange market is. It's just basically our currency on the market, same way you purchase anything in the market, be it tomatoes, onions, garri, the same it is for the currency. And having laid that foundation, I think we should just move on and talk about some of the factors. And I think you have tried to talk about it, Sadiq. Let's talk about some of the factors that affect the value of the naira and all of that. So I'll come to you, Olaimi. Speak to us about the factors now, and maybe to add to some of the things I've said as well. The factors that really affect the value of our naira now. On that, I imagine the imaginary, what's that thing market women put their goods on now? The trays, right? What affects that value of the naira on the tray? Olaimi.
Okay, good evening, Kayode. Yes, so we've laid the foundation as to what foreign exchange is. Now to talk about what factors affect it. So the major factor would be demand and supply. Right?
Same way it affects tomatoes.
Same way it affects tomatoes. So obviously, the exchange rate is the value of your currency in relation to another currency, right? So demand and supply will be factor one. You have economic factors and you also have political factors. So when I say demand and supply, what do I mean? Obviously, the more your currency is demanded, the higher its value. And the less your currency is demanded, the lower its value, right? So to bring this into more concrete terms, it's saying if you are a nation that is exporting, obviously people are trying to buy your currency to be able to buy your goods, right? And so the value of your currency will naturally be higher, and vice versa. So if you're a country that is importing, you're trying to buy foreign currency or buy another currency with your local currency to be able to buy the goods. So I think that's the relationship between demand and supply. Economic factors range from inflation, interest rates, GDP, economic growth, investor sentiment, and then you go to political factors, which would be stability, government intervention, and a whole range of things, right? What important to mention would be balance of trade, right? So obviously, the more you export, or the more nations who are able to export have a stronger positions than the current countries that are importing. So I think in a broad sense and in simple terms, those are the major things that affect the value of your currency.
That's a lot to affecting just our humble naira as it is. Interesting. Thank you for that. I'm going to be coming over to you now. He's mentioned some points. He tried to elaborate on the demand and supply bit. And I think a lot of people can understand that. If all of a sudden everybody wants to buy Gary, the Gary seller will think, I don't have plenty of Gary, so let me mark up my price so that my Gary is more expensive, right? So the more you demand for something, the more the price goes up. And when we're exporting naturally, it means that our currency is in demand because people are trying to get Naira to buy our goods, right? But you also mentioned economic factors. So maybe you can start with your own foreign exchange 101 and then dovetail into some of the factors that he has not elaborated on yet that affect the value of our Naira in the foreign exchange market.
Okay, thank you very much. I'm also saying good evening to our viewers. So, as they have mentioned, my colleagues have mentioned earlier, foreign exchange basically the value of your currency that is exchanging for another currency, and that should be a foreign currency, a currency of another country. And just as you mentioned, in this instance for Nigeria, the dollar is the commodity now. When you have so much Naira chasing scarce commodity, which is the dollar, the price of the dollar starts to go up. And in foreign exchange management, once the amount of your currency that you use to exchange for another currency is going up, that's a depreciation. That means you are losing value. However, if that amount is lesser, it means that you are appreciating. That means you are gaining value. So, what has happened is that the foreign exchange market is a market where your currency is exchanged for other currencies of the world. And again, because Nigeria is a largely, as it is, import dependent, so we have a situation where the Naira is being not demanded enough. So Nigerians are demanding foreign currencies to be able to import goods and services and also machineries and other inputs, other factors of production. That leads to pressure on Naira. Now, for economic factors, Olayemi had mentioned about trade flows and the likes. So, for instance, inflation. Nigeria is dealing with high inflation right now. So when you have inflation in an economy, what you have is that the value of the assets in that economy is less, becomes less valuable. And once you have that, foreign investors are not attracted to that economy. So you begin to see them leave. Now, that is what brings in the Central Bank of Nigeria, where they try to moderate inflation. And in doing so, they want to keep investors in, make sure that the demand for dollar or the demand for foreign currency is reduced or curtailed. Because again, it's not just demanding for foreign currency. It also means that the Nigerian Naira is being dumped. As once you are dumping an asset, the value of the asset goes down. What the central bank tries to do is to make sure to put in place policies that will stem any action that will lead to the dumping of the Naira, which leads to a devaluation of the currency.
I love the way you put it. And now that you mentioned central bank, let's go over to Sadiq and help I mean, Sadiq, you heard some of the explainers they gave, and the central bank plays a major role, and I think everybody agrees on that point. So speak to us to maybe further establish the point that Abayami was making. Speak to us about how the central bank plays that, because there's a lot of work I see, because you're trying to rescue the currency, as it were, as a daily struggle. So speak to us about the work that the CBN does with the policies, more importantly, the recent or the latest policy of this government to sort of help the Naira find its value. So speak to us about the work that the CBN does, Sadiq.
Okay, thank you, Kayode. So the CBN, as rightly mentioned, played a key role in the foreign exchange market, all with the aim to achieve certain level of stability that would support the economic objective the country is pursuing. So Kayode, I agree with you. You will also agree with me that it's not an easy task. But simply put, the flexible exchange rate regime pursued by the central bank require the central bank to also ensure that market is determining the price of the currency in the market. So the currency is freely determined by the forces of demand and supply. The interest of the central bank is to ensure stability. How does the CBN ensure stability? CBN also is a participant in the foreign exchange market. So CBN come in to do a lot of things in the market, provide the market environment, provide the order of trade in the market, ensure discipline, provide policies that would also guide participation, ensure promotion of policies that would trigger supply and also discourage demand to a certain point in time. On top of that, the central bank is also a buyer and supplier in the market at the same time. So the CBN supplies FX in the market, and you've seen in some instances the central bank also reached out to the BDC. What that means is the supply-demand gap is addressed by the CBN to be able to have a stable currency. However, there's a limit to what the CBN can do. The CBN has its reserve that is a reference for whatever interventions that the central bank might do. The reserves.
You mean for the rainy days?
Yes. So basically that's another role the central bank play is the role it plays as a lead determinant for interest rates. Abayami has mentioned, Olayemi has mentioned how the interplay of interest rates, how interest rates also affects the price of this commodity we're talking about, which is the dollar. So as interest rates is high, what that means is it will attract foreign investment. It will result in more inflows of dollar into the economy, and then by so it will result in appreciation of the currency. At the same time, the central bank is tackling with inflation, is also trying to moderate and manage interest rates based on its monetary policy objective. So FX market reforms, interest rate adjustments, market interventions, these are all various roles that the central bank plays in the FX market to ensure that the exchange rate is stable. Kayode.
Thank you very much, Sadiq. I'm going to just ask right away, and I think this question is something I've encountered a lot of people. So the goal, I think, is to have our exchange rate at a very low level. For some, they want it 1 naira to $1, right? In fact, they want the naira to be stronger. So 1 naira to $2.
Yeah. So it's amazing.
The CBN can't just wake up one day and say, today we'll make 1 naira equal to $1, or better still, make 1 naira equal to $2. Sadiq, is that possible? And why is the CBN not able to do that in the most simplest term, Sadiq?
Okay, so Kayode, let me just create an instance in this scenario. So let's say today, so the central bank, of course, with the approval of the government, because whatever it is going to be a national decision. So if the nation decide to go with a fixed exchange rate, and by whatever calculation is 1-to-1, so there's going to be an announcement that today, effective tomorrow, 1 naira is equals to $1. So what will happen after then? So immediately what that means is the 10,000 in your pocket has become equivalent to $10,000. Because when you are pegging a currency, you are pegging it with a particular currency. So 1-to-1 means 10,000. It means it's cheaper for you to buy whatever you need from overseas than to buy from Nigeria. So in a matter of, in a very short while, we will lose all our foreign currency reserves. We will lose our monetary policy independence. We will lose our production base. So that is exactly what it means. And by the time we finish the reserves, it will occur to us that, wow, probably the naira cannot be 1-to-1 to a dollar. Then we will now struggle to find the level of the naira exchange rate versus the dollar. And if care is not taken, before we recover, it will take us a long journey. If you recall the case of Zimbabwe, the case of Venezuela, I think at some point they tried to arbitrarily fix the currencies at a certain point, probably that the currencies shouldn't have been, and the result was obvious. So that is actually what would happen in our own case. Now, Kayode, also maybe for the purpose of clarity, so a fixed exchange rate also has to be based on fundamentals. So a country that has a lot of foreign exchange flows, foreign exchange earnings, have built strong reserves, can afford to fix the exchange rates. And the fixing of exchange rates has to have an element of flexibility. Now, for example, if you look at petroleum prices, they're fixed, but at some point they would have to adjust. And if those adjustments are not made, you can imagine the outcome. Even at that, at some point when the prices were fixed, the government was providing subsidy. So at a point when the subsidy was withdrawn, the price adjusted to a particular level, and it was fixed to some extent. And from time to time, we have seen government coming in to adjust. So even if it is fixed, it has to adjust based on economic fundamentals as the economic conditions change.
There you go. So if you're listening out there and you've been asking that question, that's the answer. It's not magic. It doesn't work like magic. You just use a magic wand and say a naira, a dollar come to the same value. What you find out is if that were to happen, it will be Nigeria that will be paying the remaining. So you are paying 1 naira, right? But Nigeria will be paying the 1,400 or something on your behalf. Imagine Nigeria paying it for everybody. Eventually, we're going to run out. But thank you very much, Sadiq, for that explain. I saw the man in the studio chuckling when I asked. Akito, let me come to you. I know that you probably had to answer that question, or it's something that you had to deal with from time to time. But having heard the work of the CBN, we know that there are other factors that come into play to cause this fluctuation of sorts. I want us to begin to talk about some of the other factors that we may not have elaborated on well enough. We've talked about demand and supply. Fantastic. We've talked about I think we talked about inflation to a large extent, maybe not as much, but we mentioned inflation and some of the other economic indices. But there's also the political factor that was mentioned. And is there any other factor we've not touched that is affecting our foreign exchange?
Yeah, thank you, Carl. Clearly there is. If you look at the structure of the economy, over 90% of our FX earning is coming from the crude sales. So what that means is that the price of crude in the market, that's in the international market, the production output in terms of the size, and then the size of a foreign reserve will all go in determining what is the right value of naira. So anytime we have some dislocation or misalignment in all those factors, the naira tends to fluctuate, and then we begin to see what we're seeing. I also see that if you look at what was happening before now, before the unification of the market, we also have the reduction in crude production caused by the theft. We also saw the impact that it had on the accretion to the foreign reserves.
So we're not able to get enough dollars from our crude oil.
Exactly. And once you don't have that firepower to meet the domestic demand for that, because we're likely importing a country, it will be very difficult. I think another key factor is the speculative part of the market, and that also runs with some market sentiments. If people see you and they feel they cannot take your risk as a country, they don't have interest in your assets as a country, that's your risk asset as a country. I mean, the government, how can I bring my money in there? Is it a country that I see as a good risk, support? They will never come. And then when you look at the speculative activities, which is why the central bank also came and introduced the zero NOP, which is the net open position. So I just have to make sure that whatever I buy, I also create that liquidity in the market by selling.
You have to explain to some of us that don't speak English very well. When you say zero NOP, what does it mean? Explain to us, some of us, maybe English.
Okay, so what I was just trying to say is just to see how allowing banks to hold position on the FX, how the central bank has come to review it and then come with a more like directive just to stabilize the naira and create more liquidity in that space. And because if you have more speculators on your currency, it's very likely that you will not get the true value because they are not supported.
Who are these speculators? Because I hear that a lot, speculators, but that they are also responsible for this. Who are these speculators? Are they listening to us right now? Who are they? So everybody would know.
Well, I just use the word speculator loosely. The people who have right and power to buy are still the financial institutions. So before now, I can buy a position for as long as I don't breach the limit.
So I can buy dollar.
I can buy dollars
Okay.
into
And keep
mines
it.
and keep it
Yes,
for
just,
a while.
yeah.
And then maybe 2 days, secondly, third day, I can decide to sell. So that was considered as act of speculation, which it was seen as one of the greatest factors affecting the value of naira. So it did not allow the naira to have its true value. You can't really say it's market reflective or it shows the conditions in the market because it's speculative.
It's just people saying, I want to sell it at this amount based on what I'm seeing playing out. Very interesting. We need to take a break now. I like the way you explain this speculation part. So if you're a speculator or a speculative listening to us, you also affect the value of Nigeria's naira. We'll take a quick break. Don't forget you can be a part of the show. 0916-257-1214, 0700-7000-977, or 0901-133-9791. We still have this gentleman joining us, Sadiq from the Central Bank, Akintoye from Fidelity Bank, Olayemi from Polaris Bank, and Abayomi from Keystone Bank. These men put together have decades of experience dealing with the foreign exchange market, and they're perfect for this conversation. So if you want to know more about the value of the naira and why it is what it is, stay with us right here. We'll be right back.
Wow, everything just get expensive. Now, bro, but make we look and go at my brother. See, your shoe not from Italy, your shirt not from Turkey, your phone not from China, your car not from Japan. In fact, everything within your body, so now import to the importer. How that must be consigned on. If price of dollar go come down, it gets many things where we supposed to. Like wait, number one, we supposed to export past how we they import. Number two, we supposed to buy more made in Nigeria products. Number three, we support local business. And number four, if you want send dollar and other foreign currency enter Nigeria, we dey use international money transfer agents. It makes sense. Oh, country people, let me join hands, reduce the pressure on our naira, our export market, and increase forex inflow. Now, this message from Bankers Committee. For this country,
All of them are poor.
People catch. Okay, see. I'm not designing for shops this morning. You did design cute. Don't do not catch. I want to collect to this morning. Why? I don't know what happened for 16 and it is happening again. That's the end. I must collect naira note. Okay, see. Cash there everywhere. Bank, ATM, POS agent. And if you want to cashlessly, you fit use mobile app, internet banking, ATM, POS, USSD, QR code, and other options there. You sure? I beg you not to go. Your customers, they should wait for you. See, the cash when you find people don't see them. Come on, people. Money, spend them, collect them. No wonder, no panic. Cash there everywhere. This message is not from Bankers Committee.
Are we sticking to Zoom? Yes.
All right, you're welcome back to the Financial Literacy and Public Enlightenment radio show brought to you by the Bankers Committee. Today on the show, we're talking about Nigeria's exchange rate. What determines Nigeria's exchange rate? Why is the Naira versus US dollar exchange rate so high? Why is the exchange rate always fluctuating? And these gentlemen joining me in the studio have done a good job explaining some of the factors that affect the foreign exchange rate. Factors like demand and supply, the economic indices. There's a role of the CBN as well. But the point here is that everybody has a role to play as the regulators, the financial service providers, and you and I as Nigerians. Yes, we have a role to play in this economy. So it's good for us to listen up so we all know our roles and do our very best. I'll just reintroduce our guest just in case you're joining us on the show. This is, by the way, the very first episode in 2025 of Financial Literacy and Public Enlightenment radio show. Yes, so it's the first in the year. We still have with us Sadiq Ahmed, Chief Dealer Financial Markets at the Central Bank of Nigeria. That is the #1 bank in Nigeria, the Apex Bank, the financial services regulator. He joins us from the nation's capital, Abuja. And right here in our Lagos studio, we have Akintoye Babalola, Treasurer of Fidelity Bank. We have Olayemi Agbe-Davis, Treasurer of Polaris Bank, and Bayomi Akinyemi, Treasurer, Keystone Bank. Gentlemen, thank you for staying with us. Fantastic work you're doing. They've worked all day at the bank and they've continued their work here. Thank you for your service, gentlemen. So let me come to you. Quite interesting conversation that Akintoye was walking us through with speculators and the rest. But also, this question has always been on the minds of a lot of Nigerians. Why is this dollar naira matter? Why it does not stay in one place? Today is 1.5. Tomorrow you just wake up, you say it's 1.6. And you plan with 1.6. Tomorrow is 1.7. Can you not stay in one place for maybe 1 month? Let all of us plan. Why is it always fluctuating?
Okay, that's a good question. And I think that's what everybody wants, right? Stability is the first thing that everybody is looking to achieve, and also what the central bank is looking to achieve. As to why it doesn't stay in one place, we've discussed a number of complex factors that affect the value of the currency.
Yeah.
And so that is why, the currency value will change over time, right? So, we spoke about interest rates, we've spoken about inflation, we've spoken about balance of trade. These factors all put together, and there are myriad of factors, and they're very complex in terms of the interplay to determining the value of the currency and why the currency can't and won't stay in one place over time, right? So the name of the game is stability first,
Yeah.
right, which is what the central bank is pursuing, and then we'll gradually pursue an appreciation, right? But those things are structural in nature.
In other words, let's even balance first.
Yes.
Before we now say let's bring it down.
Exactly. Right? So once you've created stability, that helps everybody, the everyday man and woman plan, businesses, individuals alike. And it also helps the central bank manage and moderate the currency. Then we can then pursue appreciation. And I'll give you a simple example. We've spoken about how the balance of trade affects the value of the currency. If you are not a productive nation, you cannot have a currency that appreciates.
Yeah.
Right? And what do I mean? If you're a nation that imports more than you export, and over time, your currency is going to lose its value. Why? Because you are constantly demanding another currency in exchange for your currency to be able to buy goods and
In
services.
simpler terms, it's like you're a man that has a wife at home, but you are busy chasing other women. Is that what? Is that a simpler way to explain?
You said it on me.
But go ahead.
Yes, but it's as simple as that, and which is why I said the first aim is stability, and then on a medium to long term basis, we can pursue appreciation when we make the nation more productive. And I think Akintoye spoke about how we're a monoproduct economy, and which is why if you keep on listening to the government, you hear things like diversification. They want to pursue agriculture. They want to pursue mineral exploration, right? Those are things that can help create more value to which we can export and which will over time create more value for the currency and which will help Naira strengthen over time. So if we are to mine these things medium to long term, then it would create more value for the Naira. I mean, the Naira is stronger currency. Why? Because you're selling minerals that people are buying from you, and they have to buy your currency in exchange for another currency, and that helps to strengthen Naira as a whole. The same with agricultural outputs as well.
Yeah.
So I think first is to pursue stability, and then we can pursue an appreciation.
Pursue stability, then appreciation. Fantastic point there. I'll come to Abayemi. Eventually, when we begin to wind down, we'll now talk about the role of Nigerians, everyday Nigerians, how we can also be a part of this, because they say it takes two to tango, right? While we expect that the government, regulators will do their very best, we also should try as much as possible to do our very best. But Abayemi, perhaps you might want to add to that point made about why we can have it stable for a long time. So it will help with planning, right? Because we have businesses who import a lot. And again, we'll get to that point where we'll talk about some of the things we can do as Nigerians. We have businesses that import, and today they plan that, okay, I'm going to sell my product at this amount, I'll make this profit, and be able to purchase maybe raw materials or import things based on the profit I've made, right? And then they finish all the selling and realize that the value has gone up again. So for a lot of them, it's a lot of a headache. Perhaps you might want to add to the point that was made, but there's also the role of the international events, international market in all of this, because Nigeria does not operate in isolation. So is there something else that happens from outside the country that also affects our currency in country?
Okay, thank you very much, Kayode. So in terms of stability, firstly, I need to mention that my colleagues have spoken well about, but I also need to add this, that stability doesn't mean that you have one single rate. Stability means that there's predictability. You know that, for instance, the dollars, people in America, in the United States, know that the value of the dollar can range between, there's a lower range and there's a higher range. So they can plan with that and say, if the dollar appreciates, I expect it to get to this level, and if it depreciates, I don't expect it to get too higher than this level. So stability in the exchange rate doesn't mean that the price will be static at one price, but it means that there's predictability between the range with which the rates can go. So what Olayemi says, government through the central bank is looking at stability. That means there will be predictability to say, if Naira to dollar is 1,500 today, in the next 1 week, I don't expect it to depreciate more than 10 Naira, maybe to 1,510.
So it's almost like the price of petrol these days, that you can almost predict that it stays in a certain band.
Exactly. That's what stability is about. But it's going to appreciate, I guess it's going to appreciate more than 1,490. So you have the range. But it's not that it's going to be static at 1.5 for the entire week, because there's trading going on every day. And like Olayemi said, there are other factors that determine the price of the Naira to the dollar. So if, for instance, in the last couple of days, we had foreign investors bringing in funds into the country, and we saw the Naira appreciate against the dollar, at least in the official market, and also seeing that appreciation in the alternative market. So that is very, very key. Now, in terms of what happens in the international space, again, there's hardly any market in the world or any country in the world that operates in isolation.
Yeah.
So you have factors like the economic factors that I have mentioned. If the central bank of maybe the European Central Bank increases their rate, it means assets in the Eurozone becomes more attractive. If you have any Eurozone investors in the country, they will tend to take their funds out. And that means that there will be more demand for foreign currency, which puts pressure on the value of the naira.
Interesting.
And of course, in recent times, we had the Western central banks, saying that they'll stop increasing their rates, now even saying they're going to start cutting their rates. It means assets in that line will become less attractive, and then they are investors. People that are investors in that market will start to look to the emerging market, of which Nigeria is one. So they'll start to bring their funds in, and that's what we saw in recent times that led to the appreciation that we've seen
Of the naira.
Yes.
Interesting. Or if Donald Trump just wakes up and says, I'm going to do something. Or he said, drill, baby, drill, and that will affect the price of crude oil and naturally affect our own earnings of dollars. Fantastic point, gentlemen. By the way, you can be a part of the show, as I said earlier on. We'll be taking your calls and SMS in a few minutes now. You can send us a message if you have questions about Nigeria's foreign exchange rate, the market, maybe a question I've not touched on yet. You can send us a message on WhatsApp on this number, 0901 133 9791. I'll take it again, 0901 133 9791. That's for messages. But if you want us to hear your voice, if you want to talk to us live on the show, you can just call us right away on 0700 7000 977. That is 0700 700 0977 or 0916 257 1214 0916 257 1214. We're going to be taking your calls any moment from now. But let me go over to Sadiq quickly. Sadiq, as it stands right now, because hearing Abayemi talk about the certain band reminds me of the fact that we have windows of the exchange rate. So some say if I want to buy $1 now, I cannot just buy it for 1,400. What my Aboki in quote to sell for me is 1,600. So speak to us about that disparity. Why do we still have the official rate and what they call the parallel market? And tell us the rate as it is today, so Nigerians listening to will know. Nobody will give them both and say it is a certain rate that it is not, Sadiq.
Okay, thank you, Kayode. You rightly mentioned. If you remember, this time earlier last year or 2023, mid-2023, there was an announcement by the then acting governor announcing the unification of the windows, liberalizing the FX market. What that does is prior to now, there were various windows offering various prices. So prices are being determined at various windows, and that constituted a huge distortion in the market, prevented price discovery, and led to a lot of issues that brought us to a liquidity crisis, capital reversals, and what have you. So now we're here. There was an announcement for unification, and you've all witnessed how the exchange rate was unified, probably not at a level that Nigerians would want it. But what is very key was the bold step that was taken by this administration, the Governor Cardoso, to converge all the market, all the windows, and abandon the duplication and multiplicity of various price determination avenues. What that does, it brought everybody, both buyers and sellers, to the same pool, and then price was being discovered. It will take some time before full price discovery will be achieved. Reason being, the market has suffered a long time of distortion. There was a lot of confidence issues, and what have you. Now, what we've seen currently is a reversal, a restoration of that confidence. For market participants, they would allude to the fact that we're seeing this liquidity that we've lost a long time ago, that we thought we're not going to have it back. is gradually coming back. We've seen foreign investors regaining confidence coming back to the market. And then we've seen convergence, minimizing the margin between the parallel market and the official market. So a very critical key question you ask, why do we have this disparity between the parallel market and the official market? Now, in the trade arena, there are certain trades that are done in the informal market. And then those trades are not eligible to access FX in the official market. And naturally, those trades would offer a premium for a particular currency that they take to settle their own transaction. So what we are seeing now is that informal market fueled by activities of informal trade going on and other structural issues which the central bank is collaborating with the relevant government authorities, including the Nigerian customs, the fiscal sector, to ensure that those distortions are addressed such that the price determination at the parallel market would not be so detrimental to that of the official market. The target is at every point in time to see there's a convergence. Once there is no arbitrage between one market and the other, there won't be any incentive for the likes which you described earlier, the speculators or other elements wanting to source from one market and upload in the other market for economic gains. So naturally, the disparity we're talking about as a result of different players, different market participants accessing those funds across. So what we've done, which is something that we also advocate, there's information dissemination to the general public is also a little bit distorted. Recently, the central bank has rolled out the electronic foreign exchange management system and has also migrated to an order-based system. What that does is we're inviting all demand to come to that market. So naturally today, there are still certain end users of FX that are not aware that this window is available, or they can actually move their trade demand to this particular market, the NFM, Nigerian Foreign Exchange Market, and eventually get the FX that they desire. Probably they are still stuck in the past where they thought FX is just allocated based on certain other criteria. But in the actual sense, the market is now open, and we have been advocating, and this is one of such platforms that we are also reaching out to businesses and corporates, that if your trade is eligible, and most trades are actually eligible, direct your demand to the market. Your bankers will represent you at the foreign exchange market. They have a price. You agree on a price that you want to buy. They can advise you on what the price. You will know. You will see where the market is, and they will take your order and they will come to the market. The central bank and all the banks are in that market. Your demand will be met. And this is something that should go to all Nigerians and all businesses to know, that if you're, for every reason, you're patronizing the parallel market, just because you think it's the only market that provides you from liquidity, we're telling you that has changed. Come back to the official window. There's liquidity for you to take. Thank you very much.
Thank you very much, Sadiq. There you have it. But you didn't give us the rate too. What is the official rate today?
Okay, the official rate today, market close at 1488.99. That's our weighted average NFM rate, 1488.99.
And that's the official, and that's the one you ask people to go to their banks to access dollars at.
Okay, so let me give a clarity here. So the way the market works, which is the order-based system currently, so unlike the tomato that you gave an example earlier, the price of USD, which is the dollar, is actually determined on a minute by minute high frequency. So there's interbank trading activity that happens during the day. Market opens and close. So the trade that goes on within the market happens and settles at different rates. What you have is you have a reference rate, which is the official rate, so-called official rates that we talk about. But if the banks are coming in with their orders, probably they have taken their customers' orders, they are guided by that anchor rate, which is the rate that has been published as the official rate. Based on that, they submit their order. Their order will come in. They can actually, just like a bidding system, a bidding process.
There you go.
Thank you.
So Sadiq has given us, the deep workings of the FX market. Thank you so much, Sadiq. And I'm glad that this is being talked about. And that's the point of the Financial Literacy and Public Enlightenment radio show, to give people the right information. Gentlemen, we're winding down now. And I wanted to just, anchor your final thoughts. By the way, this continues next week. We're going to be talking about how to understand devaluation, how to boost forex Nigeria's foreign exchange inflow. But let's wind down with this outlook. I'm tempted to ask Sadiq, but we're totally out of time. So if we can just take 30 seconds. What is your outlook? And this is a question from one of our viewers as well on Zoom, Thaddeus Odegbe. It says, where do you see Naira rate by the year and 2025? What will be Richard drivers? And gentlemen here, they're laughing. So we have about 2 minutes to wind down. So we'll just take 30 seconds each on this question. A very tough one, but let's try to handle it. I'll begin with you, Akintoye.
Yeah, that's a very difficult question. But I think if you ask me, I would say that it's light at the end of the tunnel.
Not toilet this time, or the tunnel.
Yes. Clearly, we're seeing that if these reforms continue, the implementation, the transparency, the market integrity, the confidence that has come in, we believe all this will dovetail into Naira appreciating very well.
So we can get better.
It can, for sure, it will get better. For sure.
Oh, I mean, outlook.
Okay, so
I'll have to do 10 seconds each because originally we're out of time.
crystal ball question. I think for stability, as Abraham said, I think I see a range traded between 1,400 and 1,500. I don't think the central bank either wants a rapid appreciation or depreciation, or we want stability, which is what I said and which Abraham explained. So I see between 14 and 1,500.
There you go. Finally, Abraham.
Thank you, Karen. I'll go with Olayemi. I think that we've seen situations sometimes last year where we saw a rapid appreciation. And don't forget, we have foreign investors in the country that also take advantage of a rapid appreciation to take extreme rate gain.
Right.
So I think stability, as I've mentioned, is very key. And I see the rate ranging between 1,100 and 1,500, as I said.
Well, I'm going to end with my own outlook. I see the rate at 1,000. Gentlemen, we have to thank you so much. We're totally out of time. Mr. Sadiq, Ahmed, Chief Dealer, Financial Markets, CBN, Akintoye from Fidelity Bank, Olayemi from Polaris Bank, and Abayomi from Keystone Bank. Gentlemen, thank you so much.
Thank you for having us.
Thank you, Fabio.
And to everyone watching and listening from wherever you are, thank you so much for being a part of the show today. We're back next week. We'll be talking about how to understand devaluation. Then we'll talk about how to boost FX market. So it's a lot we have for you on the Financial Literacy and Public Enlightenment radio show, brought to you by the Bankers Community. On behalf of the whole production team, they say it takes a village. The engineers, Daniel Kuri, Olatunde Abdulateef, BC Tech support, Ibrahim Bachaba, studio manager, Idowu Shedio, and assistant producer, Leye Adigwe, producer, Forces, Maria Woma, and Force Art Director, Bolanle Oyemi. On the video, we've had Samuel Kennedy Adebayo. It's been a pleasure serving you. My name is Kaido Kijolo. See you next week. And don't forget, always make profit in whatever you do. And